Hey everybody, Rob Maurer here, and today we've got a few analyst updates on Tesla, including the initiation of coverage by two new analysts on the stock. We've also got a battery update from Panasonic, news out of Giga Berlin, an update on charging, and some breaking news on Tesla's exec team. Alright, so looking at the markets, after the hotly anticipated consumer price index report this morning, we ended up relatively flat in terms of the NASDAQ, down 0.15%. Tesla actually outperforming, up 1.7% to close at $711.12. So nice to see some stability there. We'll see if that holds throughout the rest of the week. Remember when we have had the last two Fed updates, so the FOMC meetings, the market's actually done pretty well coming out of those meetings, but then swiftly reversed the following day. So we'll see if something similar happens with the CPI, as it did come in higher than expectations. Again, we'll talk about that in a second. But first things first, we are now 1 week out from Tesla's earnings report. With that, we've got a couple of updates on ShareLoft. Members can now go in and submit their estimates for the second quarter for revenue and earnings per share. We also got our first charts up and running today, so you can go in and you can see how Tesla's actuals have come in over time. You can see how my historical forecasts have compared to that. Same thing with Wall Street's forecasts. And as you submit your own, you'll be able to track that history here in comparison as well. So it should be fun, and we'll continue to build on that. And then I have also updated my model for Q2 and beyond if you want to go and check that out. All right, so looking at the CPI report, as we had talked about yesterday, expectations were somewhere around 8.8% for the year-over-year headline increase. It did come in higher than expected at 9.1%. That's the year-over-year number, and as we can see on the blue line on the chart here, that is a new local peak, so the highest inflation year-over-year in 40 years. So obviously not great news. If there is a bit of a reprieve, it would be in the core CPI number, which of course excludes energy and food. That was up 5.9% year over year. So on the maroon line there, you can see that this has actually continued to drop a little bit. It still did come in a little bit higher than expectations, but down slightly from the 6% increase that we had seen in May. I think that's a big part of why so far the market seems to be kind of taking this in stride. As always, the market is forward-looking, and as we talked about yesterday, this report is somewhat unique to the reports that we have had over the last few months, because this time, over the last couple of weeks, we have seen gas prices fall, which was a big contributing factor to the high number in the June report. Even so, expectations for interest rate increases have increased today. We talked yesterday about keeping an eye on the CME Group's probability estimates for rate increases for the July meeting. Yesterday, those probability estimates sat at about 90% for a 75 basis point increase and only 10% for a 100 basis point or a full percentage point increase. Today, those have almost completely flipped as I'm recording. They're now estimating just a 25% chance for a 75 basis point increase and all the way up to a 75% chance for a full point. So that'll be interesting to follow over the next couple of weeks as well, but presumably by the time we get to that meeting, a full point increase should be almost fully priced in, depending on what happens over the next couple of weeks. So a 75 basis point would probably be seen as a positive by that point in time. And as usual, any go-forward commentary from the Fed will be very important. So that's where we're at coming out of the CPI. Of course, the producer price index will be reported tomorrow morning, so something to keep an eye on as well. But moving into the Tesla-specific topics, we do have one item here that is breaking as I'm recording, and unfortunately I am sad to report this. Andrej Karpathy is leaving Tesla, Tesla's director of artificial intelligence, after about 5 years with Tesla. So first off, huge thank you to Andrej for that time. I think we have seen autopilot advance tremendously in that period, maybe not to what Elon had hoped, but there certainly has been undeniable progress over that period of time, and Andrej seemed like a really good fit for that period. So definitely disappointing to hear this news, and I do think this is a significant loss for Tesla. Andrej today wrote that it's been a great pleasure to help Tesla toward its goals over the last 5 years, and a difficult decision to part ways. In that time, Autopilot graduated from lane keeping to city streets, and I look forward to seeing the exceptionally strong Autopilot team continue that momentum. I have no concrete plans for what's next, but look to spend more time revisiting my long-term passions around technical work in AI, open source, and education. Elon did immediately reply to this tweet and said, quote, "Thanks for everything you have done for Tesla. It has been an honor working with you," end quote. That is definitely not a sentiment that gets shared with all executives leaving Tesla, so it appears Andrej is leaving on good terms. Hopefully that line of communication is still open for the team, and you never want to close that door. Maybe someday Andrej would return. It wouldn't be unprecedented for Tesla, but for now it will be on to a new chapter. Now this isn't all that surprising. Of course, Andrej has been on a sabbatical for the last 4 months. Even prior to that, we had heard rumors about Andrej potentially leaving, and coinciding with those rumors were a lot of comments from Elon, making sure to recognize that the Autopilot team was not just led by Andrej, but many other leaders as well, and kind of following those rumors, following those tweets from Elon, it seemed to be preparing for this eventuality, which we have now arrived at today. So I do think Tesla has had plenty of time to prepare for this. Still, the timing is not the best reflection on Tesla's progress with FSD. If things were so close to being complete, You would think that one of the key leaders on that project, somebody that has put in 5 years of work developing it, would probably want to stick around until that milestone happens. Not to mention the doubling down or the 10xing down that we have seen Tesla do in AI recently. A departure like this during that period is not exactly what you hope for. At the same time, we do have to recognize that this is one person. For Andrej, Tesla was really his first step into industry, and a lot of his interests seem to lie in academia, which it sounds like from this tweet he is expressing renewed interest in. So it's also not something that you want to overreact to. I mean, you could have said the same thing about the timing of JB Straubel leaving Tesla. That happened in the middle of 2019, and I think we all are aware of what happened with Tesla's stock since then, but also with Tesla's business and the strength that it has shown. Clearly, it would have been a massive mistake to overreact to the move that JB made, which was also a departure on good terms, and clearly JB had things that he was interested in doing elsewhere. So not necessarily all that dissimilar from what we're seeing with Andrej here today. Probably the last thought on this for today, it does put increased interest, I think, on Tesla's AI Day, which remember had been pushed back to September 30th. Maybe that'll give us some insight, if we don't already have it by then, into some of the leadership changes that we might see. All right, we'll leave it there, but again, just want to say thank you to Andrej and definitely wishing him all the best in his future endeavors. All right, next up, we've got some analyst updates. We actually have 2 new analysts initiating coverage on Tesla today. First, Canaccord Genuity, which has actually covered Tesla in the past, but we've got a new analyst on the case now. That is Managing Director George Janarikis, who is starting Tesla off with a buy rating and an $801 price target, calling Tesla Apple on steroids. George did a brief interview today on CNBC and discussed some of their thesis on Tesla. He said, quote, "We spent years covering the smartphone industry before this, and there are an incredible amount of similarities between the smartphone wars and the EV wars. But the one place and the one competence that Tesla has relative to Apple, it is manufacturing," end quote. Poignantly to today's topic, he also said that, quote, "With regards to AI specifically and autonomous driving, we're believers that Tesla has a strong edge in that competence too," end quote. So Apple on steroids with additional manufacturing competency, autonomous and AI driving competency, and yet only the $801 price target. He did mention in this interview that they do have a bull case. However, I don't have the full note, so I'm not sure exactly how their bull case is mapped out. If anybody happens to have access to that, definitely always appreciate those being passed along. The other initiation on Tesla today came from Truist. They have also started the stock off with a buy rating. They, however, have a $1,000 price target. And unfortunately, in this case, that's about all the information that is out there at this point in time. Not a lot of media coverage yet on this one, so we'll keep an eye out. If there is anything that comes through on Truist, I'll be sure to pass that along. We've also got an updated note from Alex Potter of Piper Sandler today. They are keeping their $1,035 price target and outperform rating on Tesla, but they have done some deep dive work here on the competitive framework. Potter says, "In our years of covering Tesla, investors have always focused heavily on the threat of competition from old school auto companies. While understandable, we think this risk is overstated. After all, Amazon and Apple once competed primarily against booksellers and desktop PC manufacturers, but obviously these companies had broader ambitions. We think the same will be proven true of Tesla, but while Tesla's dominance may one day extend far beyond the auto industry, we must concede the car market will never be a monopoly, and at least a few non-Tesla brands are likely to find long-term success." So they've put together a ranking/scoring system to try to assess this based on demand for battery cells, long-term margins, exposure to China, strategy assessment, and then have put together their rankings. So 1 through 14, you've got Tesla, no surprise. Number 1, you got Volkswagen at number 2. Remember, this is for legacy companies relative to Tesla. So Volkswagen at 2, Daimler at 3. Toyota actually interestingly at 4, but that is based on what Piper Sandler seems as a unambitious but de-risk strategy that relies on maintaining market share using hybrids. I obviously hate that strategy, but there's probably some degree of validity to it for a period of time. So they've got Toyota at 4, and then towards the bottom of the list, you've got Mazda, Renault Nissan, and Jaguar Land Rover. So feel free to examine those rankings more closely if you would like, but for now we'll move on to some news from Panasonic. We have talked previously about how Panasonic was reportedly looking at locations in both Oklahoma and Kansas for a new multi-billion-dollar battery factory in the US. Well, today we've got reports from Nikkei Asia that Panasonic has now finally selected their location. This will be in Kansas, just southwest of Kansas City, near DeSoto, Kansas. This has been reported to be about a $4 billion factory. I'm not sure if there have been any capacity figures announced yet, but that should be a massive factory, and this will be partially intended to supply Tesla. TechCrunch's report on this that is coming out just as I'm recording says that Panasonic has said that this will be the world's largest EV battery plant. As this is just now sort of being officially announced right as I'm recording, we'll keep an eye out and hopefully we'll get a little bit more details on exactly what that's going to mean and what the timeline might look like as well. All right, next we've got a quick update on Giga Berlin. TeslaMag.de is reporting today that more Model Y long-range VINs have been spotted that have been produced at Giga Berlin. Of course, we've previously talked about this story, but they are also reporting that customers have now been assigned these VINs with estimated delivery dates of this week. So those first customer deliveries, always a nice milestone. We've also got some updates on charging here, first from Holmars, who is talking about V4 supercharging rumors. We've discussed some of these already, but he is saying that V4 supercharger deployment starts this year. First locations will be in Austin, Texas, and that there is a higher max charge rate and voltage that will be supported, as well as both CCS and Tesla cables. So obviously still unconfirmed at this point in time, but that would seem quite logical, and the timeline there I think would be pretty exciting. Other interesting charging news, there has been a petition started by the founders of Aptera, an EV startup, requesting that Congress considers making the Tesla connector the standard connector for EV charging in the United States. They show a little diagram here that I think makes this very clear why this might be a nice thing to do. Tesla's connector is excellent, quite small, so I would love it if this happens, and I will put a link to this down in the description if you do want to sign this petition. I would be very surprised if something like this were to actually be approved, but hey, I suppose it's worth a shot. All right, last thing for today, a couple of updates on Twitter. First, we did not see any Form 4s, so it appears that Elon has held his shares in Twitter at least through Monday, even after attempting to terminate the merger agreement, so kind of interesting there. And then CNBC today also had a retired judge from the Delaware Supreme Court on to discuss the case in general. She gave her thoughts and said that she thought Twitter had a pretty good case, but, quote, the problem with specific performance, especially with Elon Musk, is that it's unclear whether the order of the court would be obeyed. The courts in Delaware, courts all over, are very concerned about issuing a decision or issuing an order that then is ignored, flouted. It reflects poorly on the court in terms of being able to give relief to the parties that are asking for it. So I think it's much more likely, in this case, that the court would say if Twitter prevails, Twitter will get money damages as opposed to specific performance, end quote. So given her prior experience, I thought that was definitely worth passing along and interesting to hear her thoughts. But that will wrap it up for today, so as always, thank you for listening. Make sure you are subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Thursday, July 14th episode of Tesla Daily. Thank you.